Well, welcome back to Peachtree Accounting. We have used the wizard to set up the basis for our company, and at the end of the wizard, when it's set up all our files, what it's opened is a setup guide to help us through the various stages to complete our work in setting up the company. And you'll note that it says start here, right? In other words, we've got to build our own chart of accounts. That is a logical place to start, because if there's no chart of accounts, well, there's nowhere to make any entries. It's rather like having a blank book. Right, so we're going to click on Chart of Accounts, and there we are. Chart of Accounts comes up, and note that it indicates that types of accounts are usually identified by a particular numbering system, and those logical groupings that they refer to you'll find in Peachtree, you'll also find them in QuickBooks, and you'll find them in lots of other accounting systems as well. So that you've got a series of numbers here which relate to asset accounts, then a series for liability accounts, those for equity accounts, revenue accounts. You will also find that those for cost of goods sold and for expenses as well. So we're going to, broadly speaking, we're going to follow that pattern. And if we click, we're then in a position to add new accounts. So we will click on Add New Accounts, and you will see there's a little wizard that opens here. We're just going to center that up to make it easier for you to see. And if you click on the account ID, you see there's no accounts at the moment. So the first account we're going to do is we're going to call it 1000, and we're going to tab across, and we're going to call that a cash account. And you'll see then that it offers you different types of accounts. In other words, how are we going to group it together? Well, this is easy because it is cash. And we're going to save that account. So it's very easy. Up there we have a little icon called Save. We simply save it, and then we go to a new account. Well, let's say that we're going to have property and equipment, so we'll call that 1500. In other words, we'll give it another number, and we're going to call that property and equipment. Okay, so we will now look at the account types. What type of accounts have we got here? It's not an account payable, it's not an account receivable, so we'll keep going down. Here we are, fixed assets, right? So this is a fixed asset account. So we'll make that a fixed asset account. We will save it. Now, we're a business that will sell goods on credit. So we're going to need one special type of account. We'll call it 1200. And this is the accounts receivable. There we are, and we've probably got one that says that it's an accounts receivable. Here we are, accounts receivable, and we are going to save that account and go to a new account. Well, what happens if we decide that we're going to buy our insurance for the year or pay rent on premises for a year? Well, we have another form of account here which we can enter, and that is a prepayments account. So we're going to set up a prepayments account, and where are these going to come? Right, it's not an account receivable, is it? No. So we just go down there and we look for the account which will match it, and it's a current asset, right? So we're going to call it other current assets. We will save that, and we want one more in here. Let's just see how our numbering system is going. We can pull that up, you see, at any time, and we can look. You see, I'm trying to get some sort of order into them. Okay, so somewhere between the accounts receivable and accounts prepayments, I'm going to put in another. I'll call it 1250. And I'm going to say that this is our inventory or our stock account, and we look at that account type there. So we must have another current asset. We may have inventory listed separately. Yes, we do. So let's select that and keep to their pattern. Right, so we save, and now we've got a series of asset accounts. We're fine on that. So we want at least one liability account, because if we don't pay people straight away, we need to record how much we owe them. So I'm going to call that 2000, and we're going to call that an account payable. Here we are, and top. There we are. It's an account payable type. Save, new. We can do some of these fairly quickly. Okay, so let's look at the equity accounts that we will need. Now, obviously, we don't have stocks and shares here, so what we have is that money, what the business is worth, if you like, is represented by the owner's investment. So we will call this owner equity. And we then have a number of equity accounts. Now, what the business is worth as far as the owner is concerned is an equity account that doesn't close. It continues for year to year. It'll have a value at the end of each year, and that will be carried forward. So we're going to use equity doesn't close, save, and new. Occasionally the owner will remove money for personal use. We call this owner drawings. Now, this will alter at the end of each year. We will adjust what the owner's equity is by considering how much has been taken out of the business during the year. So that's equity which gets closed. So we're going to save that one. And then we will need one more account in this area. We'll call it 3,200, and this is retained earnings. Again, this continues from year to year. You usually have this where equity retained earnings, which exists as a separate account. So we save that, and we go to new, and then very simply for the moment, we're just going to put in a revenue account. Sorry, I just have to go back and alter that. There we are. Revenue, and this will be a form of, I think we call it income account here. So that's the revenue received, and we save that. We go new, and we can add accounts later, but we will just add one more for showing you how to set this up, and we'll call it 6,000, and we will call this the wages expense account, assuming that we're going to employ people. And so we then look at our types of account here, and hopefully somewhere there we are, we have expenses. So we save. Now if we look at the list of accounts, that's what we've created so far. That's a very, very simple chart of accounts. You see we've got some asset accounts, we've got one liability account there, an account payable, we've got the basic three accounts we'll need for owner's equity, we've got an account to record our income in, and we've got one example of a wages expense account. So that's the simplest way in which we could start setting up a chart of accounts. And that's the end of this second little session. So thank you, and we will then move on to another session.